Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. Okay, daily chart. You can see they're trying to hold in 9-day as resistance. We're going to go to the hourly chart right away because what you've just got are a bunch of blocks of consolidation on the hourly chart. You had the one little actual move down on Wednesday afternoon, but we've been stuck in this zone the majority of yesterday, heading into today through Globex. So this week has really just been a series of consolidations, battling over the weekly pivot and the 9-day as resistance, and a variety of price areas as support. The most recent right around 46.40, 46.44. Before that, it was 60 to 64. So that's really been the story of the week. As far as running around doing a bunch of intraday trades and trying to make money in this tape, unless you're a true scalper, it's been tough to get any, momentum going. So yesterday was particularly tight. It's very whippy. The problem is it's whippy on the edges and it keeps whipping you out. It makes it hard to really hold anything beyond, 2 to 3.5, 4 handles without getting stopped out, unless your risk metric is just completely blown out and you're taking like 5, 10 handle stops on stuff. And that's just not, that's not how we play cricket. That's not a sustainable risk strategy. Like if you want to be trading, beyond, Christmas, you get a couple of those wrong. Not only is it going to scramble your account, it's going to scramble your brain right along with it. So that's not really the way to go. But I was mentioning to subscribers, this will pass. We're in a consolidation period. We're consolidating below the highs. You got to wonder, are we just kind of flagging and are we going to go higher? Or are they going to convert this 9-day and we start to come in to, around 4,600 right down here, this little green line? That's your daily mid band. Remember, we trade upper band, middle band, lower band. That's the deal. That is the deal. Always has been. And I have said in the room this week, and I'll say now, it really feels to me like the bulls are vigorously defending these price areas. They don't really want it to come in. We saw this earlier in the year, and eventually it will come in, not for a long period of time, just long enough to catch all the shorts really leaning, and then they'll take it back higher. But they're really defending these price areas. They don't want it to come in. There's always a fear of, if we let it come in, where the hell is it going to go? So you haven't seen a truckload of profit taking up here. What you have seen internally, the advanced decline line has been basically floating around zero all week long. So you got some red stocks, you got some green stocks, but neither side has had the backup or the foundation internally to either build a meaningful move up or a meaningful move down. And if that's going to be the case, we're going to just hang out in these little fucking rectangles all week long. That's what we're going to do. So accept it. Understand that the market's going to do this sometimes. Have some perspective. Trade a heck of a lot less if you are trading index futures, and wait for the tape to kind of loosen up. Whether that's up or down doesn't matter. That's where we are. So you've got volume weighted average price and the proprietary moving average and the hourly mid band and the daily pivot all sitting between basically 48.5 and 50 quarter. So that's going to be key off the open. Weekly pivot 61 and change. 9-day, 60 and change. That's going to be critical too. All right. Everybody have a fantastic day. Have a fantastic weekend. Be safe, be healthy, take care. Trade them well, and I'll talk to you Monday.